I was through the dot-com bubble back in the late 90s. I mean, that was when I started, and this is so reminiscent to it. I mean, you're seeing companies that had $100 billion valuations that are now at 20 or 10 billion. I mean, the amount of money destruction with some of these falls is absolutely incredible. This is not supposed to happen. It shows that as much as many crypto players don't want regulation, you have to have safeguards and regulations in here. If something's going to claim to be tracking the dollar and it's going to have a 20 billion, 25 billion, whatever market cap it was, it has to be able to peg to that dollar. And this is a black eye for crypto as a whole, honestly.
It is.
And then really what it's doing is it's causing the whole crypto sector to take a dump.
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. Ha!
It's your boy Crypto Blood, and welcome to another Kick in the Session. I've got a four-time returning guest. I love having this guy on, Gareth Soloway. He's the turbo. I call him Turbo Trader, ladies and gentlemen. This guy knows what he's doing, and I'm just, we've got so much to talk about because the last time I had him on was in March. Okay, we talked about this channel that we saw the S&P really rise out of. He called it the steroid boost from the lockdown. We're going to talk to him today and see if he can give us an updated chart on the S&P 500. I also want to talk to him about Terra Luna. That is very concerning to me. Maybe he has some details that he would like to share with the audience on that as well. Gareth Soloway, how are you, man? Thanks for coming back on.
Hey, thank you for having me. I'm doing really well in spite of all this craziness out there.
Yeah. I will have to say I definitely was wrecked a little bit today because of a lot of the whiplashing going on in Bitcoin. We saw like a 10%, actually a 20% move, down 10, up 10, round trip. Really wiped a lot of people out. I'm still short now at this point. It did get back into the trade, but tell me I want to start first, of course, with the macro. That's why I like to start with you, and then we'll kind of zoom down to crypto. We have this situation with the stock market, okay? Where do you feel we go from here? The VIX is down today, which is surprising. But tell us what your thoughts are on the equity markets and bonds.
Yeah, interesting to see the VIX down because, sometimes the VIX can be a little bit of a leading indicator, and it may tell us that we're getting close to a technical bounce in the market. So, I think the biggest story of the day was that CPI number this morning, right?
Yes.
So coming into it, basically the market was looking to see, did we have peak inflation or not? And we kind of got this ridiculously gray area number, where it wasn't like we saw a 7 handle on it. We saw still an 8.3. So it wasn't as high as last month, which was 8.5, but it's close enough where it's like, well, is that a rounding error? I mean, maybe it's right around the same. Maybe we aren't at peak inflation. I think the market wants to know peak inflation is in there so that they can think that there's an end game for the Fed in terms of hiking. We didn't get that today, and that's causing continued selling in the stock market. In addition, you talk about like Terra Luna, what's going on with the UST, I think it is.
Yes.
And that's just one more kind of like, punch in the face to the overall risk environment, right? So it's not as if the market didn't have enough to care about already with the Fed hiking, with potential global recession, with the Russia invasion of Ukraine, with, with high oil, all these things. And then you throw into this, wait a minute, is any crypto asset that we're investing in, is it safe, right?
Right.
So, I mean, it is just a mess out there, no doubt about it.
Yeah, so I really want to ask you why we saw so many pundits. I don't know if you did this last month, but a lot of pundits in March came out and said, well, last month about March's inflation or CPI number. Oh yeah, that's the peak. We're not going any higher. 8.5. That's the highest. How and where do they get that confidence to say that? I was very shocked to see so many pundits come out and say, yeah, we're not going any higher. What were they using as metrics to come to that conclusion? I'm very confused.
Yeah, so I think what they're looking at is it's based on year over year numbers, right? So starting right around this point last year is when we started to see inflation really spike up. So when you look at it like that, it's like, okay, well, if we were already at 8% last year, we would have to add a full another 8% this year to really, or 8.3%. And so you start to have these numbers that go up and up and up. So what's interesting is it's going to seem like the inflation's coming down probably over the next 3 to 6 months, because realistically what we saw is last year at those same periods, inflation was already jumping. if you go back to the previous couple numbers, we didn't really have any inflation in the metrics in the numbers yet, and it came on kind of mid-year into the late second half of the year. So I think that's what they were queuing off of. But honestly, 8.3% is basically even to last month, and I think that's why the markets are definitely spooked a little bit here.
Do you think next month's report higher than 8.3?
My guess is it'll start to come down. I do also think it will. Now, I think there's a big difference, right? So inflation coming down to like 7.5% is still horrendous. It's still horrible. It still means that every year you're losing 7.5% of your dollars if you're holding dollars.
Right. That's compounded interest. That's compounding, right?
That's right.
So,
so that's really, I mean, that's not good, but the market is looking for any straw to kind of grasp onto at this point that says, okay, maybe it's going to eventually come back down. And more importantly to the markets, can the Fed only do, like, let's say 4 more rate hikes this year, and then maybe if the economy's getting weak, they can stop. And the only way they can stop is if inflation does start to come in. So, I mean, this is a crazy scenario, but it's going to create so much continued volatility over the next 3 to 6 months.
There's so many moving parts I've never seen in my life of looking and monitoring and trading in these markets. I've never seen this many variables to influence the direction of all of these markets.
No, me too. And I was through the dot-com bubble back in the late 90s. I mean, that was when I started, and this is so reminiscent to it. I mean, you're seeing companies that had $100 billion valuations that are now at 20 or 10 billion. I mean, the amount of money destruction with some of these falls is absolutely incredible.
I mean, you can just pick one. Netflix, Peloton. I mean, the list goes on and on. And even this new, supposedly Tesla competitor, what's it called? Rivian?
Rivian.
Ouch. Ford just dumped their investment in that.
Hey, let me show my charts. We can go through a few of these if that's okay. But I mean, you're so right. I mean, look, this is the Roku chart. I mean, this is incredible. Like, Roku has basically done a full round trip from the pandemic low. You're just about there. And this is when it was, I mean, you're talking like $60. It goes to
classic double top,
and then back to basically almost 60. I mean, these type of moves are crazy, like SEC Limited. I mean, look at this round trip, all the way up from basically $50 to almost 400 back to the 50s. Insane.
That is crazy. ARK investment, the ARK fund. Kathy Woods was the darling child of Wall Street. Could do no wrong, could make no wrong. Yeah, look, everyone looks smart in the bull market, you know?
Yeah, you're right.
So what's your take on that? Because I saw a very interesting chart where they overlaid ARK with Berkshire Hathaway.
Right.
And it's coming, Berkshire just slowly but surely going up, you know, and you have ARK go up and coming all the way back down and almost meeting Berkshire. What is your take on that stock or, fund, ETF fund?
Yeah. So, I mean, this is just incredible as well. Bottom line is, you can see how the round trip on this as well. And I mean, to me, it's just kind of common sense where she just messed up here. You know, she had these huge investments in some of these mega tech, crazy PE ratio stocks. And the Fed basically told us, hey, we're going to raise rates. That means these assets are going to come down. And she didn't reallocate her capital properly. And so you saw, for instance, today we're seeing Coinbase getting crushed again. That's partially due to cryptocurrency, but also due to their earnings.
Right.
Take a look at that chart here. I mean, but look at this chart. I mean, this is just absolute blood out there in the streets right now. And I really do think that, to me, this is when you see these last falls, like, so the stock was already trading down from 367 down to basically 120. In a matter of 4 days, it's gone from 120 to $50. So this is where normal markets, and I say normal because not that any of these kind of flushes are normal, but you just never know if this is that normal time or not. But this is where lows should be put in some of these names, where you get these last kind of capitulation, really panic sell-offs, freakouts, 20, 30, 40% down in a matter of a couple days. This is usually where bottoms are put in before you get a big bounce. But it's always the scariest, right? It's always the scariest to put your money into the market at these points. But then again, it's usually the highest reward if you're right.
True. Now, I have a question for you regarding, the whole causation correlation thing. So the Federal Reserve, they're raising interest rates to try to calm down, this overheating economy. But will the economy cool down first before the Feds can their actions actually take any real meaningful take on the markets? Do you think the recession, because I think we're already in a recession, we're in the early stages of that recession, will the economy itself slow down everything, or will the Feds have to do and continue to raise interest rates? I'm just wondering if they're going to be able to do 4 or 5 more hikes and get to that 250 basis point target they have for 2023, I think.
Yeah, so I think you're kind of on the right path here, where you're in a situation where the stock market is doing the job for the Fed, right? So the Fed has only done a 50 basis point rate hike at this point, this year at least, I think. Maybe they did one in early January. But basically, when you have a stock market that declines 20, 30, 40%, it basically takes the wealth effect, which was creating inflation, or one of the reasons for inflation, and it's just wiping it out. Right. So all of a sudden people felt so great. They were buying houses. They were buying new cars. They were doing this because they looked at their 401k in 2021. They're like, holy cow, every month I'm up 10%. Like, this is incredible. I'm just like multiplying my money. Well, guess what? All that's vanished now. Now we have, I think the NASDAQ's got to be down close to over 25% now from the all-time highs. And that's going to slow the economy. And you're right. You are going to see, in my opinion, a recession hit far before the Fed ever gets to that final raise that they probably think they're going to do at this point.
So will they quit before they achieve their dot plot interest rate hikes?
That's my guess. My guess is they will, but I think it's going to be a combination, right? So I think you're going to see inflation come in to like 5% and then stay at around 5%, which is still high, but I think that's what's going to happen. And then you're going to see unemployment start to rise. So by late this year, I think you see unemployment starting to uptick to 4%, maybe 5%. And then in 2023, I think you go over 5, maybe 6 or 7%. And there's going to be a point where the Fed is going to have to make a decision. They're going to have to say, okay, do we still want to take inflation down from 5% to 3 or 2%? Or do we want to tackle unemployment, which is now at 8 or 10%? And I think there's going to be a pivot point there where they're going to say, okay, well, we'll tolerate 4 or 5% inflation because we can't allow 10% of the workforce to go without jobs. And then they start pumping money again into the system.
Yeah, I'm with you. Next, we got to talk about, let's go ahead and get into the crypto side of things. But I want to first start with Terra Luna. Oh my God. I put a tweet out earlier, man. This is so funny. I said, when you start doing technical analysis on stable coins, you done effed up.
That's a great tweet. That is a fantastic tweet. I like that one. And you're right. I mean, this is not supposed to happen. It shows that, as much as many crypto players don't want regulation, you have to have safeguards and regulations in here. If something's going to claim to be tracking the dollar and it's going to have a 20 billion, 25 billion, whatever market cap it was, it has to be able to peg to that dollar. I mean, this is a black eye for crypto as a whole, honestly.
It is. It is.
If you're someone who's in love with crypto, and even though I'm bearish on crypto overall, I love the long-term concepts, and I do think crypto is going to be something that really is the leading force in the next 10 years. This is not what you want to see, man. I mean, this is Terra Luna's chart here, which basically backs that stable coin. And this thing went in like a matter of a few days to basically $1 right here. I mean, horrible move. And then really what it's doing is it's causing the whole crypto sector to take a dump as well, right?
Yeah, this is what I wanted to ask you.
Yeah. So I mean, bottom line is it's scaring investors in crypto, right? So luckily, Bitcoin is still barely holding on to this support level at 28, 29, 30,000. I think it's right below 30,000. But it is, I mean, this is a big level on Bitcoin. If this level gives way, there's not a whole lot of support until you get to about 24,000. And then you're talking 20,000, which has been the level I think we talked about last time. That I think that's where it's ultimately headed, at least to 20,000, which gets you back to the 2017 high. And then what's crazy is if we go through that, then I have another target at 12,000 as a potential ultimate downside. That was kind of your max downside is 12,000.
Yeah. Oh man, I'm buying with diamond hands at that point.
Yeah.
But it may be too late for Michael Saylor at that point. I don't know if you have heard, they had to disclose their liquidation line with the leverage or collateralized Bitcoin they have outstanding at $21,000.
Yep.
How do you see that playing out for them? They say they have a large sum, quote unquote, but what is your take on that scenario? I think once the market knew that target, it goes for it, right? That's how the
So
markets are.
true. The money, so it's like blood in the water for sharks, right? I mean, this is the oldest trick in the book for institutional investors. It's in the hedge fund world where when other hedge funds hear that, let's say, this hedge fund is short of stock or whatever, then a lot of them will gang up and try to squeeze them out and push it the other way. And this is exactly what kind of happens in the crypto markets as well, where you're right. Now 21,000 has like a bullseye target on it. And it's like, oh my God, like the fact that they had to disclose this, it's not a good thing. Now, honestly, he is such a hardcore believer. I highly doubt that he will find a way, like you said, figuring out they'll collateralize other Bitcoins or do something, because I do not see him getting in a position to dump that Bitcoin. Now, the question is if it goes to 15 or 12,
right.
Do they have enough at that point, or do you
right.
see forced liquidations? And then what's even scarier about this, if it's forced liquidations and you have a whale like that holding that much Bitcoin, I mean, what is that? I mean, the possibilities are not good of what could end up happening to Bitcoin at that point. I mean, do you see it in one night just have that big candle down to like 5,000 because they have to liquidate so much? I don't know.
Oh man, I never even thought about the forced liquidation level of, we don't know what that is, right? It's all speculative.
Yeah.
But that's interesting, man. We could be in for a very wild ride. But I tell people, and I put a tweet out the other day, you got to have dry powder to take advantage of these situations. You can't take advantage of it if all of your money is in the asset that you like the most. So
100%. And I think it's important to say, like, put a plan on paper ahead of time, because when it comes to it and it's falling, your emotion is going to get a hold of you, right? So what I always recommend is saying, okay, well, let's just say it gets down to 21,000. Well, maybe say, all right, I'm going to put 100,000 in Bitcoin, but I'm only going to start with $20,000 in it at 20,500, and then maybe every 3,000 or 4,000 down, you just automatically put another buy order in, so you can dollar cost average. Because what ends up happening is it gets down to 21, someone gets so excited they put all of their money in right there, and then it goes to like 12, and they're like, oh crap, So you got to think about the structuring it with a plan that you stick to versus kind of just allowing that emotion to take over.
So do you have a chart for the actual stable coin for Terra Luna, the UST? What's your take on this? Again, this is not, as you stated, this is a black eye for the crypto markets, especially when we talk about, not having the regulatory agencies come in. I think they just laid a blueprint out for a ton of regulation coming to the stablecoin arena. What is your take on, and how do you see this playing out for UST? Does it go to zero?
Yeah, so number one, I think this is the one in Tether. So this is UST in terms of Tether, which is basically in terms of dollars as well, since Tether is still pegged. But I mean, look at the craziness of this. I mean, this is just unbelievable. But at this point, my guess is there's been too much loss of confidence in this as a stable coin, where it's hard to believe that people are going to trust it in the future, at least for some time. And so even if they're able to somehow get it pegged again, as an investor, why would you ever go into something that has proven itself to not be a peg? This
is very interesting, and this is the point I thought about. This is not like any other crypto asset where, okay, we may have a price we think, and the market has priced in where the optimal trading range is for that particular asset, right? And that fluctuates. But we all know a stablecoin is supposed to be $1 to one stablecoin.
Right.
So after that is violated, it's over. You can never come back from that.
No. And trust is everything, right? I mean, that when it comes to something being pegged, trust is everything with that. And so, I mean, it would be absolutely remarkable if they got it pegged to the dollar again. And then in all fairness, like if it was pegged for like 6 months, you'd get some trust back, maybe after a year more. But I mean, the question is, how long do they have? I mean, when there's other options like Tether out there, do you have that type of patience? Is it even worth it for them to continue? I don't know.
Could this spread within the crypto markets? Is the move down in Bitcoin not only from what's going on in the equities markets, what the Federal Reserve is doing, but in addition to that, what is going on with Terra Luna and them having to liquidate Bitcoin to try to stabilize that UST?
Yeah, so one of the things that I'm concerned about is for other coins out there, because this is the problem. Once it's been proven that they can that buyers and sellers and maybe big funds can gang up and break something, the question is then, are other coins, even if they don't have a stable coin, are they then at risk? Like, so for instance, and I'm not saying that Polkadot is, or Avalanche, or any of these other ones, but I mean, the falls on these are now getting kind of scary, where you're now, I mean, you've broken this 2021 level here, which was around $10. You're now trading at under 9. And I mean, you're potentially going back to this $5 level on Polkadot. You look at Avalanche, same kind of thing, where, I mean, this was a mega cap player up here, and this was not that long ago, and then here it is at $30 basically. And I think that's one of my big concerns, is what type of shaking does this do to the rest of the crypto market? And then are there holes where these funds, that these big whales, these entities, can they exploit these and try to drive them down and profit on shorts, right? So I mean, like, imagine if you're a whale, and this is not that this is legal, but this type of stuff happens where you get a big short position on another crypto, and then you kind of let float the rumor that there's some issue. And because people have just experienced UST, right, then they're all willing to believe it, and they all sell, and it drops it like a rock. And, and again, without regulation, without the SEC really watching over this, it is the Wild West. I mean, like,
Sure.
legit, it is the Wild West.
You're right. Hey, markets take the stairs up and the window down.
That is right.
That's how it works, ladies and gentlemen. I want to jump back to equities, because on the last video I had you on, we talked about this chart, the S&P Spider ETF Trust, and I want to know where we are with things now. This was the last video.
Yeah.
Can you update us on this chart?
Yeah, absolutely. I love that you have that old picture there, right there, because if we go to this chart now, you can see that we have absolutely come down more, like we talked about happening. And what's interesting is we're just about back to this longer term trend at the high end of it right here. So I do think, again, I'm kind of in the camp where we're getting very close to a bounce. Number one, bearishness is very, very high, not just in the stock market, but cryptocurrencies and overall. That usually is a contrarian indicator for a short-term bounce. And you're also getting into this high end here, which is kind of a trend line that marks the high end of this range. So you might have a little bit more downside, but I do think a bounce is coming. But after that bounce, there's more downside. I really am a believer that you have to at least retest. And I think the Fed wants this. I think the Fed wants the stock market back at the pre-COVID highs at minimum. All right.
Mm-hmm.
So that's really another 15-20% down on the S&P 500 here, and that just gets us back to before they pump all the steroids into the market that set us up like this. So, so I do think that, yes, we're going to get bounces, because it's just the nature of markets to not go straight down, unless you're Terra Luna or the
right.
But in general, you should get bounces, but I do think people have to expect more downside.
Could you zoom in on that a little bit?
Yeah.
So here's my thing, because this may set up for a very, very good bounce, even in cryptos, because it all is kind of syncing up here, right? We have the S&P just now hitting the top of that channel, and then we have Bitcoin right there at the bottom of that channel.
Yeah.
That seems like that may be an area to maybe play some, bets there, low risk, large reward bets.
Yeah, I agree. And I think the biggest plays will come from snapback short covering rallies in, like, ARK Invest, ARKK, like the ones that have been just clobbered. They could have literally 20% bounces in a couple days if we just get some sort of stabilization in the market, just due to short covering. They've been pounded so much. But I think you're right on this. I think you'll notice that charts coincide, different asset classes coincide at major levels, and it all kind of coincides. And it makes sense, right? Because we know that the NASDAQ generally trades with crypto. So when the NASDAQ drops, crypto drops, and vice versa. So if the NASDAQ, for instance, is going to bounce, then you would assume crypto bounces as well. Makes sense that both of them could be off the same general, support lines. Just continue to be nimble. Again, this is a market where there's a lot of money to be made if you know what you're doing. If not, you can really lose a lot very quickly. Small position sizes mean everything, right? Everyone, or at least retail investors, tend to go in thinking they want to make a fortune. In this market, it's all about playing it safe. Try to make a tiny amount of money that pays the bills, but that's it in this market. I mean, bull markets are easy. It always goes up. We saw that in 2020 and 2021. This is not that type of market. So just be very, very careful out there.
All right, there you go, ladies and gentlemen. Another episode with Gareth Soloway, aka Turbo Trader, on the Crypto Blood channel. Make sure you guys like, share, and subscribe, and click that bell to receive more interviews like this. We're out of here. Holla!
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. Holla!